G'day taxpayers, it's 2:29 Eastern Daylight Saving Time here on the east coast of Australia, and I'm going to be watching the RBA decision that's coming in about 40 seconds. And as I look at the RBA webpage waiting for it to update, I notice a couple of things. The important ones for me are that its measure of annual consumer price index, the one slap bang in the middle of its webpage, has inflation at 2.4%. On the quarterly number, the annual number, 2.4%, so a little bit below the midpoint of the target for both readings. They don't actually put the trimmed mean in the front page of their web distribution, but those numbers too are both below 3%, decelerating rapidly over the last second half of last year into early in the new year. And they say the cash rate target here is 4.10%, and it is now 2.30, so the decision should be coming up any minute, and it's unchanged. Okay, well, that's a bit of a shock to me. Let me have a look. Now, in no particular order, they say that inflation has fallen substantially. Okay, so why not cut? The board needs to be confident that this progress will continue on a sustainable basis and is therefore cautious about the outlook. Okay, well, I'm cautious about many things, but I still do them. The board noted monetary policy is well replaced to respond to international developments if they were to have material implications for the economy. That's sort of code for the Trump tariffs, I suppose, and we all know what they're going to do. So that's important. As I quickly scroll through what the RBA has had to say, wage pressures have eased more than expected, so that's interesting. There was a decline in employment in February. Okay. So everything looks as if they should be cutting rates, or the rhetoric or the writing says they should be. They've got a slight pickup in consumption expected, but it's expected to be slower than they were thinking. So they've downgraded their outlook for consumption spending. And they said labour outcomes may prove stronger than expected. So, okay, there's a little bit of an offset there. So that's possibly the reason. The labour market, which is a funny thing not to be cutting interest rates. When you've got good numbers, you'd think you'd want to lock them in, wouldn't you? Okay, there's a lot of uncertainties about monetary policy and firms' pricing decisions according to the RBA. And there's uncertainty. Well, when isn't there? I don't know what I'm having for dinner tonight. So that uncertainty is sort of there, but it doesn't mean you don't do things. And geopolitical uncertainties are pronounced. Inflation could move in either direction. Oh my God. So do they really think that inflation could pick up? That's wrong. Many central banks have eased monetary policy, yep, but they've become attentive to evolving risks, yep, but they've already slashed rates dramatically. Now, returning to inflation is the main priority of the RBA, of course. Well, returning it? Well, it's already there. Oh, sustainably, sorry, they said sustainably. Let me have a look. The expectations have been for a lower inflation target. The board's assessment is that monetary policy is restrictive, so they've already got the boa constrictor hold on the Australian economy, and they want to keep it there for longer, which is a really disappointing thing. That a continued decline in underlying inflation is welcome, but there are risks to both sides. I wonder where that risk to inflation on the upside is. I just can't fathom it. Where is it? Anyway. The board will rely on data, don't we all rely on data, and in doing so, it'll pay close attention to global developments, financial market trends, and trends in domestic demand. Gosh, what a strange statement. 95% of things on my quick assessment said that they should be cutting rates. They didn't. I hope they're not playing politics and not cutting interest rates because there's an election campaign right now. But whatever. Dreadful decision. Anyway, I feel sorry for the tens of thousands of people who will be unemployed as a result of this decision. Anyway.